Constellation Brands is the world's biggest wine company, making everything from plonk in a box to some of the world's finest cabs. But for all the Opus One and Mondavi Reserve bankers may quaff, Constellation is best known on Wall Street for being a serial acquirer. Yesterday, I sat down with CEO Rob Sands here at Bloomberg headquarters. I asked him how Constellation weans itself off the U.S. and breaks into those fast-growing emerging markets.
Well, we've got a great portfolio to sell in emerging markets. Some of our products, like the ones I've mentioned, whether it's Robert Mondavi, Clos du Bois, Ravenswood, Simi, Blackstone, these are products that will lend themselves really well to selling them in emerging markets. We already sell a significant amount of product and have good market share in places like China. We're making more investment there as we speak, opening new office in Hong Kong to service that part of the world. So I think we're really well positioned to take advantage of the growth in emerging markets with our portfolio.
The Chinese aren't huge wine drinkers, but there is a portion of the Chinese market that buys very expensive, high-margin wine. They love first growth Bordeaux, even if they mix it with Coke. How can you displace the Chateau Lafitte's, the Margots, etc., with Opus One, with Mondavi Reserve?
Yeah, well, we won't displace them necessarily, but as the Chinese become more sophisticated and they look at other wine-producing regions as places where they'll buy luxury wine products for, they're naturally going to look at things like Opus One, which of course is a joint venture between ourselves and Chateau Mouton Rothschild, and makes the equivalent of a first growth Bordeaux.
How much of a market opportunity do you think you have in China? If you were to cast your eyes forward, say 18 months, maybe beyond that, what kind of sales volume do you think you can do in that country relative to what you're doing now?
Well, that's hard to judge, but I think that China can easily, in terms of imported table wine, be a market that sells 20, 30, 40 million cases, not in the next 2 years, but certainly in the next 10 years. And Constellation being the largest premium wine company in the world, we should have a decent market share of that business, which, when you start talking about those kind of numbers, can be meaningful.
Obviously, Constellation has been the consolidator in this industry. There's no company like yours. Do you anticipate doing more on the acquisition side or on the divestiture side?
Yeah, in terms of divestitures, relative to anything material, I'd say that we've pretty much completed what we set out to do. On the M&A side, what we have historically said over the last couple of years is that we're focused on debt pay down as opposed to M&A. Why is that? Well, 2 years ago, we were at 5.2 times debt to EBITDA. Now today, when we look at our capital structure, we're in the mid-threes of debt to EBITDA, which is very comfortable for us. We're generating a lot of cash flow. We've been very successful in our efforts with regard to cash flow conversion. And
so yes, you can now be acquisitive again.
We can now be acquisitive again, but they have to be the right acquisitions. They have to be strategic. They have to fill a niche. They have to provide us growth, and they have to meet our financial criterion. And we're very disciplined in that regard. Therefore, it's really an opportunistic kind of thing. There has to be a willing seller as well as a willing buyer. We can't predict when that's going to happen, but I will say we're going to be very careful about what we do. The bottom line is with the kind of cash flow generation that we have and the availability of financing, we have plenty of room without getting over leveraged to make acquisitions.
So far as I can tell, it's been a couple of years since your credit was upgraded. Given the fact that you're paying down debt now and you're using your free cash flow to do that, how soon do you think it might be before you become an investment-grade company?
It's hard to predict.
Is it a goal of yours?
We're really right on the. No, it's not necessarily a goal of ours. We actually, feel that due to our relationships and the strength of our financial position with the institutions that provide us our credit, we're getting investment grade type rates
spreads
in any event. We're right below it. So is it a goal? I don't see that it's a critical goal of ours, because it's nice to have, but I don't see that it adds much.
Too early for a glass of Mondavi Reserve, probably, but here's an amazing statistic. The margins on that high-end wine, Mondavi Reserve, or Opus One perhaps, 80% or more. That said, what Constellation is focused on is getting people to drink something that costs more than $5 a bottle.